So what's the difference between inventory and supplies? My name is Kirsten. I'm a CPA, and I'm going to help you look at the difference between inventory and supplies. In my last video, I was trying to illustrate the difference between an expenditure, something you spend money on, and an expense, something that shows up on your income statement. I was talking about oregano, and I called it oregano inventory. Now, technically speaking, it's probably more like oregano supplies. When we use a resource, any resource, there is going to be a corresponding expense. So when we use supplies, the corresponding expense when we use supplies is going to be supplies expense. When we use inventory, the corresponding expense is going to be cost of goods sold. So what's the difference between the two? So inventory and supplies are both current assets, meaning that we expect to use them within the year. If you work at a retailer, things like supplies are going to be things like pens, pencils, the things you use in the day-to-day operations of your business, but ultimately you're not trying to sell those. Your inventory are the assets that you are holding for sale to sell to customers. Typically, anytime you have an inventory transaction, when you sell inventory, you're also going to have a revenue transaction. So you're earning revenue for the amount that you sold that inventory for, and you're going to have your corresponding expense, your cost of goods sold, when you take that inventory, that asset off your books. When you use supplies, you're just going to record that decrease to supplies, that decrease to your current asset of supplies, and then you're going to record your supplies expense. Hopefully that clears things up, and let me know if you have any more questions or anything else you would like me to cover.